Test or the test.
You heard it here first. Bitcoin is going to zero. Zero. Bitcoin is going to zero. Zero.
Good afternoon, everyone, and welcome once again to Trading with OC. Hopefully, you guys are doing fantastic. I'm surely are happy to be here, be around here, guys. I miss this setup so much. And let me go ahead. I know that my microphone might be a little bit lower, so let me fix that in a second for you. Let me do this, and let's see. Yes, of course, it needed to be, of course, very, very low. Don't know what that thing is. It's good for why it does that, but it is what it is. So let's get it, guys. Thank you so much for stopping by here. Really appreciate it. JR, how's it going, my friend? I think they're going to have a lot more stuff to do. Maybe I'll reach how to do stuff. Let's go. Let's get it. All right, guys. So as you are coming in, please hit that like button. Really helps with the algorithm. Let's go and take a look at a couple of things that I'm having in the charts. And of course, we'll see how we can prepare for the rest of the week. So let's go. Let's get it. All right, so today we were looking at Aster. We're going to be also going and take a look at Bitcoin. And by the way, we have Gary in the house. We have two top in the house. How's it going? By the way, today, Gary reached out to me on the Piper Academy Discord, and he wanted to go over a couple of things. I did promise that we're going to be going and do some basics, all right? Talking about profitability, use of indicators, how to get started, right? I mean, guys, we are already going into a shifting period, right? Let's talk about the psychology of stuff, right? Let's first go over a couple of coins, right? Let's just get some things out of the way, and let's dive into how to get the mindset and the practice on making money throughout this phase area, right? I talked about that on the courses. So, Gary, I'm going to be redirecting you to the free courses that I have done and talked about all of these transition zones, all right? But first, let's go check out Aster, of course, Aster and Bitcoin. So we were talking about, hey, breaking this rising wedge. Usually those rising wedges tend to break to the downside. So be careful because this could be a fake out. We're not moving, and in case this was a fake out or a true breakout, we are going to be looking for an entry as we break out, retest our entry still above that zero line, and off we go. But watch it, because right now this is looking like a fake out. Why? Look at this, tiny candles at the top, ready to have peak performance diamond rolling back around. That goose head did nothing. So freaking goosehead, as always. I mean, they are so deceptive, those gooses. All right, so goosehead. Actually, goosehead tend to play pretty good, but in this case, it did not. It hasn't been pushing. We still have the night for today. I'm guessing 2 or 3 hours from now. But let's take it piece by piece, all right? If we start closing back inside, short it all the way till here. TP1, move your stop to entry, and then we're gonna be looking for lower price action, all right? Easy peasy, lemon squeezy. All right, let's take a look at Bitcoin really quickly. And come on, things are starting to shift around because I prepare for you, my friend, for you, Gary. But the point is that I moved everything out of the place. What's up, dude? We have two top in the house. How's it going? Oh, see, thank you, my friend. Really appreciate it. Thank you, brother. All right, so let's go check out Bitcoin. All right, Bitcoin is doing again nothing. The point is that we did have that V-shape, kind of like a recovery that we were expecting, right? We're not. I don't think that we're on the right one. It's maybe here. No, yeah, we were on that one. So I was first looking for this bounce up, did not happen. We went down, and then we were talking about. Let's go right here. Yep, it was the right one. Okay, but I deleted it. Then we were talking about, like maybe some strip of the lows, and then if we could get a bounce around this zone, I think we could be making a range, or even better, if we could make a movement like this, we would be on our way up in here and out of the trend line. But guys, very scenario, it's playing out right now. Look at that, not enough strength right now. Yes, our leading indicator is pushing up. That tends to be positive. That's what we're holding, all right? But this time, I would have expected that we already have gone a little bit higher and trying to do something like that, all right? At least something like this or like that. This will be much better what I will be expecting, right? But so far, it hasn't done anything. It's just basically hovering over that area. Not good. Time is ticking. And remember, if the prediction or if the analysis doesn't play it out within the certain period of time, the analysis is over. So it expires and we need to go back, retrace, take a look at what is the new data, right? And readjust. Usually that means that it's going the other way around, all right? So we need to be very careful right here. So Denaro Cabrera, what's up, bro? Welcome. Great to have you around, my friend. Great to have you. All right, so far, standing by on Bitcoin, seems like we are going to have a reversal. Let's bring up a couple of our indicators in here, all right? And well, then that's, let's just wait for those to load. All right, so where do we have some resistances? In here. That's what I was thinking. Hey, either we bouncing here, but we're bouncing lower. You see that? Or we break out. This is what I would really like to see, right? Getting to grab this liquidity and then come back down, use as a support, and then going to find that big trend line. It still is a possibility, all right? I mean, we can still create a higher low here. And because of that, we're going to be adding an alert once again at these areas, and we're going to be visiting our oscillator. If on the oscillator we're breaking through that zero line, if our money flow is turning green, well, then we're going to be considering back into a trading here for the 95,300. All right, perfect. I think that's what we're going to be talking about today. Let me just get rid of everything here, and you'll see that I have clean charts in here. All right, let's get started first talking about, hey, let's scratch things. Let's scratch everything. Let's start from the beginning. Sometimes, all right, you might be feeling that your account it's low. Mine is too. Coins that I've been holding, all right, which are very low, they look like shit. I mean, I'm very negative on all coins, all right? 90 to 80% of my big portfolio, it's on Bitcoin, and that's because I've been accumulating for the past 2 cycles, all right? Just a little bit before, but the past 2 cycles. The point is, you first need to build up the grounds, all right? Once you build up the grounds, then you go out and start trading a little bit more and outside into the crypto, shit coins, all right? Something like that. If you already have a bunch of altcoins, holding them, you have 2 chances. You have, I mean, this is the truth of the matter. You have 2 ways of recuperating your assets. First, decide how much money you're willing to lose. Why am I telling you this? The truth of the matter is that nobody knows what's going to happen, right? That is just the simple truth, right? If we break upside, I mean, we have if this, then that, all right? So that's the actual truth. So what am I talking about that and not really jumping into, hey, how to make money right away? It is because we need to understand our situation. Remember, if we throw a trend line like this, all right, we're still like breaking it like we did before. Can we still make it out of this alive? Yes, we can. I mean, if we do this, I mean, you will see that, well, we still have a chance right there, right? And that is also comes like, hey, I mean, are you manipulating the trend lines? Yes, because there's no single truth, all right? There's no single truth. So the only way that we can do, and I would say the most closest thing that we can do, it's grabbing a mathematical tool. What is a mathematical tool? This is our regression channel, all right? Why is it a mathematical tool? Because it measures in average the peaks and lows and creates a channel, a mathematical average channel. All right, let me see if I can find it. I don't know why it's getting so hard to find that tool. Well, I do have it in favorites, so it's going to be this one. All right, from the very bottom to the very last. I don't care if I put it lower. You see, it doesn't care if I put it higher, as long as I'm going as far right as I can and then trying to aim at the lowest point, maybe here. All right, that's it. So as you can see right here, based on this mathematical channel, we have already long passed our point of no return. Okay, this is freaking worrying. All right, this is very worrying. Doing on Solana. Oh man, Gary, point number one, we first need to look at Bitcoin because Bitcoin will make things different. All right, so here's the point. I'm gonna do it on Solana. Don't worry, I'm gonna do it on Solana. But Solana doesn't have a 3-year cycle. Bitcoin does, right? So where do we measure the cycle? We measure it from Bitcoin, right? Where do we measure whether we have rotation of capital? When Bitcoin is losing that capital, right? So that is the key number one. Everything that is not Bitcoin, oh man, you should not be looking at it right now, all right? So here's where things started. All right, maybe you have a lot of things happening in Solana, right? Maybe you are invested or you want to trade it. Before we move into the trading, and don't worry, we're going to get there, all right? I'm going to try to split this thing up really as much as I can. It's, well, understanding that we could be turning into the bear market. If we're going to be turning into the bear market, we first need confirmation. Where do we get the confirmation? Out of Bitcoin, all right? Why do we need that? Because at that point, I mean, we're going to be starting to look at major drops, all right? So we want to be prepared. We have broken this thing. And sooner or later, and I think sooner, because of this week, I mean, we have had it, relief rally, right? We had it, relief rally. We have it, release rally. We have it, kind of like relief rally, all right? You see the point? It doesn't always play out fantastically, phenomenal, right? And let me show you one area that haven't. Like, for example, where is it? Here. What is your relief rally? Oh, 2 candles, 2 days, and then blop, right? So just saying, not because we have that candle. And look at this one, for example, this one. And yeah, you could be seeing the relief rally. But what happened in the meantime? Look at that. Low and then even lower, right? You see that? So, ooh. All right, yeah. I think we were still in the game. I thought I removed this. Let me actually lock it. All right, perfect. The point is, and here it is, we already have one of the first signals that we could be having a relief rally. Important. It's not about the breakout. It's about the retest, and guess what? Continuation. This is what we need to make our next analysis, all right? So understanding that we already have broken the very first support, and the next rebound needs to be inside the channel for this to keep going higher, all right? We need to wait. So we're going to have a relief rally. So be prepared for Solana. Also follow along. And I'm guessing this. I'm not securing that. All right. But just saying. Now that we understand that we have broken the previous range. All right. And yes, we can break it. I mean, the same thing happened here. Let me show you. Let's use that rejection. I mean, that regression channel all the way till here, all the way as far right as we can go, right? Look at that. Remember, it's not about the breakout. You see that? What is your relief rally? Relief rally. Okay, are we on the bear market? Yes, technically. And then maybe, and just maybe, but guys, I mean, look at when that was. October 2021, and this was on, let's push this out of the way, May 2021. We're out of dates. It's important to understand that we might have a 2-month delay. All right, why? Because of the contraption of the market, of the cycle. This is how this is quote unquote code into, not the time span, but the contraction, the less volatility that we should have, right? So right here. I mean, that was May, July. All right. So we should have seen this on July. Did we? Kind of. Right. Not that big of a deal, but we did. All right. And then we went back up. And finally, we had the very big retracement, right? Once again, if we do the same thing here from this bottom to the very top, you'll see that we have, it's not about the breakout, it's about the retest, and that's what I'm talking about, right? So be prepared for this if we don't close back in, okay? Why is that? Because you want to be prepared for the transition zone. The transition zone is where everybody starts suffering, all right? And that's the very first thing. Am I suffering? Yes, I am. I mean, I can bet you, kid you know, that every honest trader that you are right now talking to, where they're talking about their trading backs, or at least their short-term holding backs of altcoins, they are in negative. Or not in negative, but at least breaking even or something around those lines, right? Why? Because when we talked about, like, for example, I don't know, let's actually talk about Solana. Solana, it's kind of like a special coin, but look at that. Where was, or how was its rally? Its rally was in here, right? How far are we from the previous high, right? It wasn't that far. I mean, that wasn't still 2025, July. You see that? And then come back down. And then at the end, you see? This actually looks way more as Bitcoin was on the previous cycle. All right. But so far, all right, let's do it on Solana. The point is, when talking about trading, because I believe, Gare, you were interested on trading, all right? We already know that we could be into that, or we are into that transition zone where, yes, this thing, if this thing looks bad, wait till we get into the bear market. That thing is gonna look like the devil, brother. All right, so just be careful. I'm already suffering. I know, man. I know. I'm also. Sorry, here's the thing. If you have holdings, decide whether you want to cash out some of it or not. All right. If you're not, well, embrace yourself, right? Because if we reject out of the channel to the downside, we are gonna go lower. You need to be prepared psychologically for that. Wait till the next cycle, and as you start getting back up, you start selling progressively. All right. You just stuck. You haven't lost money if you have it on spot. Now, talking about trading, what do? I'm guessing that you're trying to buy the dip. Let me know. or you're not following a trend line. All right. Here's the secret. Trade Intuition in the house. What's up, bro? Welcome. Here's the secret. All right. In the message you told me, hey, you know what? Maybe I don't. What indicator should I be using? There's some for spot and then some for margin. No, they just read data, and whatever data it's being fed, they're gonna spit out a result, right? The quality is in the post processing or the processing of that data. All right. So basically, all of the indicators that we offer, they are like almost up to the finest. All right. Yes, there are some that we can improve way more than other ones that are experimental. You know, like you get a ton of access in here, right? But the point is, let's first scratch out indicators. I think that is right now the issue. Let me guess. You're looking, and please correct me if I'm wrong, all right? You are looking at the indicators and trying to read the indicators to give you a sell or buy. And when you buy, the thing kind of goes a little bit up and then retraces a lot, takes you out, and then goes back a little bit back up, right? Then when you sell, the thing is pumping back up a little bit and then takes you out and then sells big time, right? So you are not on synchrony with the markets, and then when you decide not to trade, the thing actually moves, right? Yes, exactly. I knew. Why? Simple. You are not on sync with the market. It's like trying, I don't know if you surf, or something like that, or you do some I don't know, snow sports like what would that be? Oh man, snowboarding, something like that. All right. So you'll notice that there's waves, right? So if you're talking about sea and you surf, well, catching the wave, you need to swim when the wave starts forming, right? And then you swim and then you ride the wave and then the wave starts pushing you. We're talking about snowboarding. You'll find a sweet spot sideways to the mountain, right? That give you the right perfect pitch and speed, right? If that makes sense. I have done it. Great. Perfect. What happens when you don't catch that wave, right? The sea kind of rolls you into the shore, right? And almost drowns you out. That's what's happening here. And let me show you how to fix that really quickly. Let's call it the BS. Let's actually talk about trading. All right, let's go to what time frame you're trading. I know we have a little delay, so I'm just waiting for your answer, my friend. So let me know what time frame on Solana. $5, $15, and $30. All right, perfect. Rule number 1, stick to one of those. Rule number 2, the other 2 are just for reference. Okay? So I ride slopes 24/7. Let's go, bro. Let's get it. By the way, funny story. I'm from an island, right? I do love sea sports, but what I like the most and actually mess up with my head was snowboarding. I thought it was like surfing, but no. You actually direct the board with a different part of the board, different from like dude. Seaboard. I don't quite remember the thing, but yeah, differently. So it took me a while to get used to the snowboarding, but I loved it. All right, let's go back. 5, 15, and 30. Let's stick to the pick one. I could suggest the 15 minutes just because it's in between, but maybe you prefer the 5 minutes. I'm not sure. What do you like the most? And I would say, let's get started with the 5 minutes. And that is because I think you follow Alex on Crypto, all right? Alex on Crypto is a beast trading the 5 minutes. 15, all right, perfect, 15, that's it. Great, love it. Let's do the 15 minutes. All right, let's go to the 15 minutes. And right before we go to 15 minutes, here's where the magic started happening. Look at that. What is the direction? Down. Perfect, the trend is your friend, all right? Just put it in the back of your head because this is the daily. Daily doesn't really matter when you're scalping, all right? Which is fine. And getting used to the 15 minutes with the Oscillator Pro Plus. Perfect, let's do that. First, we are going to scratching out every indicator. Every indicator. We're not going to be using indicators. That is the step number 1 to get good at using indicators, all right? So let's go back to the basics. And don't worry, my friend, I still do these things. Like when I have 3 stop outs or when I have 3 losses, I go back to basics. Turn off every indicator. I do my manual analysis because that will sync me back with the market wave. All right. Even if that means holding. All right. And now that my brain is already clear, I start adding the indicators one by one. All right. Why? Sometimes it's just like any other tool, right? Like any other professional. Even the best graphic designer will use hand, paper, and pencil to start one drawing when they are scared at the white canvas. All right. So go back to basics. Knowing what you're trading will give you like an X-ray vision. And then when you add the indicators, the thing kind of like it goes, hey, fantastic. I know this. All right. Let's do that. And feeds. All right. Yes, we're gonna remove everything. Then we're gonna be adding piece by piece into it. All right. So let's go to the 15 minutes really quickly. We already know the trend is down. Let me double click in here. And here's when things start getting a little bit, let's just say, confusing. Remember, daily, back of your head, bearish. All right. The next thing that we need to understand, it is, hey, what is a trend for you, my friend? Not for me, not in the daily, all right? Not for Allset, not for JR, all right? For you, what is a trend in here, all right? What is the difference how you identify it? First, the trend needs to be violent and big, right? Big AF. Usually I said, hey, scroll out as much as you can. Once you scroll out as much as you can, I think that you can start seeing and classifying the trend. And for that, we're going to use the best tool for trending, trend lines, right? Easy peasy, trend lines. And then you're going to start finding your trend. And it's completely valid to say, hey, you know what? This is the trend, all right? And maybe this is ranging, or this is the trend, and this is also a trend. Completely valid. Just ask yourself the question, what is the ranges? And also, remember, right now we're not talking about scalping, swing trading, or anything like that. We're just identifying trends. And here's the next question that is going to help you to identify the trend. A trend, all right, it always have to have, no exceptions. A trend, it always have to have trades within or inner structure. What does that mean? That you can scalp a trend. Otherwise, it's not a trend. Okay? So, for example, let me give you an example. This, for me, it is a trend. All right? But this one, and I could argue this one, all right, are not trends. Why they're not? Let me show you. And this is zero indicators. All right, that's why we're going to the past, into the past price action, so we can learn to identify it. All right, so let's go zoom in here. Perfect. And I can easily see now that I have a bunch of candles that give me precise information. Like, hey, look at those wicks. We learned that when we start having those wicks, we could be having a relief rally, right? Relief rally between 33 and 50% retracement. Fibs, mental fibs, no drone fibs, all right? So and I'm just saying this because you want to use fibs. So let's start just routing the cables together, all right? So mental fib, retracement between a 33% retracement and a 50% retracement. Perfect. All right. Then continuation. Look at those wicks. All right. And this is a further continuation of what? Another either golden pocket or platinum pocket. We're talking about between 60% and 70 something percent, isn't it? Like 50% will be this, right? Out of the whole thing. Right, 50% will be this, and then 70% will be somewhere where I grabbed it. So look at that, 70%. You see where I grabbed it? 70% platinum pocket. All right. Once again, we're trying to route things without using indicators. Then, with multiple candles in the way, I can still go up, double top. All right, and guess what? Again, maybe a 60%. Retracement up, a continuation. You see? Bigger. Perfect. Can I trade the inside? Yes. What is something that you cannot trade, for example? Right? This one here. The only thing that I can do with this, I mean, yeah, I can tell myself that this is a head and shoulders and then it broke to the upside. All right. Or I can tell myself that this was a megaphone, maybe, or something like that. But the point is that I don't have a clear structure. That's because they are too chunky. They're too chunky, right? They're just smashed together. Yes, I can tell myself, right? That is a trend line. Perfect. That is valid. Therefore, this is not a trend line. This is a trade. All right. So that is the difference to identify trends versus trades. All right. So you want first to identify a trend, so you can first swing trade it and then also scalp it. That's when you decide what you want to do, right? First, identify your trend with the trend lines. Remember, a trend line, and then you can make sure that it has inner structure with enough candles in between. That is the key. Okay, so far, so good. Let me know, Gary. What? I'm missing out in here. So Gary, let me know, brother. Are we following? Let me know. Do you want me to repeat something? Please let me know. All right. Yes, all good. Perfect. Love it. All right. Now that we understand the trade, my goodness. Now that we understand the trends and that the trend has inner structure, so we can scalp that inner structure, all right? That's where you decide, all right, what would you like to do? Scalping or swing trading? That's up to you, all right? But you already know how to do it. Now, let's do some tips and tricks. When you're talking about trend shifting, all right, we want to look first for a V-shaped recovery, something like this, and then either a double bottom or a higher low. And we already have our trend line. So we have both of them, and then breakout, retest your possible entry, or your possible entry, and off you go. All right. So you're still taking the risk in here, right? You're still taking the risk, and your stop loss should be reflecting that. So you're aiming to the previous low, a little bit lower, right? That wiggle room. And then you prepare for your previous area, all right, to short it, or at least to take some profits, okay? And we'll take a look at a couple of things. So somewhere around here, you start shorting it. Here is where your oscillator comes into the game to pinpoint those flips, okay? Very important. There's something important about the oscillator. They should not be used alone. They should be used with a support and resistance metric. All right. Either support and resistance, predictive ranges, or any other thing. You like FIBs? Perfect. Use FIBs. All right. Big FIBs and small FIBs. All right. Here's where you start adding stuff. But still, let's just do that afterwards, right? Right now, we're understanding the logic, not even support and resistances. But remember, if we have the trend line, we're looking for the next area of resistance, which is in here. And we're going to be looking like an average area to short it. And then we short it. And then at this area, again, we long it. And as you can see, oh, stopped out. That's fine. We already have 2 gains, right? Rinse and repeat. What is your trend line? And this is important. Look at how, since my last trend line, I never drew another one. Mistake, newbie mistake. This is what you need to get your head back into the game. Not because you're taking trades right now means that you need to stop doing your analysis. All right. So right here, my mistake. Let's go back and look at my mistake. My mistake was identifying your higher low, but not actually drawing it, right? I need to set my trend line, and look at that. Just like magic, previous area of resistance is not about the breakout, it's about the retest, double top, and you shorted here with confirmation. Bingo bango. Let's go. All right, perfect. Let's use this knowledge. This is the very, very, very basics, right? Let's actually trade and make money out of this, right? Again, no indicators involved. Let's go at the very end. All right, perfect. Zoom out as much as I can. Step number 1, zoom as much as I can. Step number 2, draw your trend lines. This is a difficult area, by the way. Why? Because this trend line here is telling me that the price action is being broken and I'm going for a breakout retest. But guess what? Does that look like it? Yes, it freakishly does. All right. And I can do a couple of other stuff around here. All right. Let me show you. This is something that you're going to battle. This is just inevitable. All right. This kind of like a weird shapes. And these weird shapes are because we are in a transition zone. Look at like from here. I mean, now that we see the complete shape, we can actually say, hey, it was like this. Yes. But like right now, where is it? Like what is the actual thing? We don't know because we cannot see the future. But what we can see, it is the past. All right. So far, the first trend line that I can do is this trend line right here. Top, 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 top. Double bottom. It's not about the breakout. It's about the retest. But now I'm realizing that maybe I can do this. Top, top. Top. Maybe topping here. Right? Because I'm thinking that this thing is this thing. All right? Or maybe I'm wrong. And this was something like this. Which is still fine. All right? Why? Because the next thing I'm looking for is this thing. You see that? So, what do I need? I need to find a support. So far, I am on a resistance. Resistance, remember how we measure that? Oh shit, let's actually just get rid of this. Whatever. Remember, breakout, previous area of highs, rejection. Previous areas of highs. Guess what? What are you doing here, brother? Why not? Let's actually go for it. I mean, am I on replay? No, I'm not on replay. Am I on the current price action? Yes, I am. Why not? Could I get hurt? Yes. Could this still go up? Yes. But still, also, let's do some more advanced shit. All right? Because this is weird. This is not the only thing that we can trade. All right? So I can also do this trend line right here. Okay? What if this thing breaks out? I'm going to be looking for my next area of resistance in here. All right? So why don't we long this? Because right now we haven't broken the previous highs. Right now we should be looking for a short or from some liquidity grab. And then making the trend line. All right. Does that make sense? Here's the thing. All right, let's go back and strip this thing down to its bones once again. And let's re-explain this because I think I'm having the feeling that it's getting confusing. First, our trend line. I don't care how you draw your trend line, like that or like this. All right, I don't care. You just draw your trend line. Okay, then we're looking for a low and a higher low and then a significant high. Low. What else are we looking for? Significant high. We mostly have it, and then we're looking for a higher. So that higher low is gonna create our next support. Okay, that's what we're looking for, that higher low. So right now, taking this possible short, because when we are not even using support and resistances, we're not using oscillator, right? And here's where the magic of using the indicators comes in. You already know exactly what you're looking for, right? You know that this short, it's an uncertain short. Okay. So, do you want to take the risk? Yes or no? Yes, all right. Maybe aim a little bit higher. Maybe instead of one full position, do a 1/4 of a position. Why? Because you know this is dangerous. All right? Or you don't want to fuck with your money. Perfect. Don't. and then wait for this to happen. All right. And maybe you're gonna wait and wait and wait and wait and wait until, oh, it's breaking through, breakout retest, and that is your entry for a short. Or you're gonna wait, oh, it's breaking through, right? And then this is gonna be your entry for a long. But in the meantime, we're looking for that higher low, double bottom, or anything that is telling you, hey, you know what? We are done dropping, like in here. Even if that is a relief rally. Okay? And again, no indicators. This is knowing the structure. This is what is going to make you money. Make no mistake. Indicators are there to give you certainty when there's uncertainty. But they're not there to teach you how to trade. Where is the uncertainty? Here is my uncertainty. Why is it uncertainty? Because this could be maybe a flag and we could go higher, in which case we are going to be looking for this, and then the retracement here. So the actual certainty comes from this low and then adding our trend line here, and your actual entry is going to be here. So you're not trading this, all right? But if you have indicators, you're transforming uncertainty into certainty. Not really certainty, but higher degree of certainty or lower degree of uncertainty. Let's do that right away. Let's go ahead and add our invite only scripts. All right. Let's go into our prime oscillator plus, prime oscillator pro plus, this one here. Let's wait for it to load. And what we need to look at is if we have the strength or not. Do we have flip of the ribbon? Yeah, we do. But we're below the zero line. But we do have some money flow. Decreasing money flow. And we have a reversal here. So this is telling me to wait. Why? Dump, pump, and dump and pump. Why? Because I'm below, but I'm still having the flip of the ribbon. So that basically cancels each other. All right. But when are you going to be turning that certainty into uncertainty, or that uncertainty into certainty? That is the actual question, right? That's what we're here for. That's what the indicators promised. All right, so that's when you start, or you need to start reading your indicators. So far, curling up at money flow means that we should be going up. All right, you already have the flip of the ribbon in here, right? And the only thing that we could be looking for still, it's going to be our leading indicator. We should be pointing up, and yes, it's pointing up, and this is neon here. Perfect. Well, what happened last time we were neon? We micro pump. So are you willing to pump this up? Well, not really. Why? Because let's actually do this thing in here. And we buy low. If the price action would have been here, yes, but it's right now here. So we buy low is a high, or breakout. Oh, look at that. Retest your entry, and then off you go. And that will be for the measured picture. What's the measured picture? Previous areas of resistance, TP1, TP2, looking for a possible retracement or looking for a possible retracement. That's why your stop loss needs to be tight. All right. Garrett, any questions so far? Any questions so far? And we just have to add one single indicator, right? Your oscillator. Then we're going to be adding what I mentioned. Remember, your oscillator needs to be used with a support and resistance system. Questions. Perfect. Great. Love it. Now, let's move one step forward. But remember, you need to nail these down. All right? Don't want to lose. Don't fuck with the markets. Just do what is the predictability of them. What is the predictability? That we're looking for a higher low. When we start bouncing up, that's where you long. You don't long here, you long here because you already are bouncing up, still with danger, but looking for the next higher high, TP1, TP2, right? So if you're not using indicators, you are still on the waiting zone or opening up a short position right away, knowing that it's a danger, Will Robinson. All right. Once again, if you are not using indicators right now, you should be shorting this area with your stop loss like this, or even like that to compensate here, aiming to higher than this low. I'd rather go like this. Okay, that is if you're not using indicators. Thank you, JR. Really appreciate it, my friend. Really appreciate it. All right. If you are using indicators right now, you already have your oscillator. Your oscillator right now gives you between certainty and uncertainty because you know when to use it. But right now, it's giving you counter signals, right? That's fine. Because first you need something to move to then the other one to move. And then when you have 2 out of 3 or 3 out of 5 pointing up, that's when you have the higher degree of certainty. If that makes sense. Okay, let's actually go. Danger, Will Robinson. Love it. All right, so let's actually bring up what I mentioned, support and resistances. All right, let's go for the easiest one. And let's just not lose our mind. And then we're going to be adding the Fibonacci's. All right, but let's go for the easiest one. For me, the easiest one, it is either predictive ranges or support and resistance, period. So let's go and add them both just for good measure. But in the meantime, let's actually go for where it said Market Oracle Plus. Yeah, why not? Market Oracle Plus. This is it. You mentioned that you have Plus, so let's add that one, right? And ta-da! All right, perfect. Important. This thing is designed to give you the trend shift outs, including inner trend shift outs. For example, look at this buy, but not because you have a buy, it means that you're going to just buy it. You have a buy. Are you above the 0 line? Yes, buy it. You have a sell. Are you below the 0 line? Sell it. All right. Easy peasy, lemon squeezy. If you want the simplest thing, make sure that you are on autopilot. Okay, that's it. But we're not going to be using Trendy right now. Trendy is the next best tool when you want to get rid of trend lines. All right. But you need a little bit more configuration. We'll go into that in a second. And because that will be guiding you to the market, to the trendy, which is fantastic. I mean, I do advise to use it, right? Personally, I do advise, friendly advice to use it, but you need to configure it. So let's not dive into that rabbit hole just now, right? Although, if this was another class, or another purpose, if you were starting from scratch, I would tell you to use it, but you're not starting from scratch. You already have a bunch of things happening. And what we want to make sure is that all of those bells, whistles, lights, bings, bangs, beep, beep, bop, bop, right? Dude, get rid of those. Out, please, right? You need to concentrate into trend line, the breakout, and where to enter next time, right? As easy as that. All of the bells and whistles, mirrors, beep beeps, bop bops, they need to get out of your life for now. So far I'm gonna just get rid of this, and my bad, it was I meant to not only adding that but also adding the Market Dynamics Pro. Here it is, right? Market Dynamics Pro is going to be giving you triangles and stuff. Perfect. I love them. As you can see right now, we look at that, we're breaking that trend. And remember what happened here? When I told you this is not tradable until you make a trend line. Ooh. And what happens is not about the breakout, it's about the retest. So we should be looking for a reversal, just like in here. Remember that? So now that short is not looking at that danger Will Robinson, is it? I mean, it still is. It still is. But let's just clean this up and let's get back to the basics. Let me double click in here and let me first get rid of that. So I'm not going to get rid of POC because that's part of the support and resistance, but I will get rid of the triangles. All right, perfect. Then, remember, simplest one, support and resistances. So let's go and enable support and resistances on chart. And I want to add, if you're just gonna do this, let's add 7 or 8 or something along those lines. All right. Then, let's let it load. I think it's half done. Then consider, and this depends on you, consider taking the proximity button here. Why? The proximity is gonna be giving you a center point from the price action right now. As you can see, it did nothing basically. So in this case, we're not gonna be using the proximity. Okay. So support and resistances. All right. I'm gonna turn this off. What I'm gonna do? Can I copy? Paste it. Oh yes, I can copy and paste the thing. Let's get it. All right, and this second one, I'm gonna be removing the support and resistances. All right, and then adding the next best thing, which is predictive ranges. And that is predictive ranges. Perfect. That's it. I don't want them to be filled. I want it as simple as possible. And that's it. All right, perfect. So here's the thing. Getting to the 0 line. Where's my resistance? Right here. If I want to short it, I need to wait for this thing to go here or lose the support. Easy. If I'm still want to short it, I can short it here. If I want to long this, I need to reject and long it here. But this is micro trading, my friend. Don't lose the big picture. What is the big picture? The big picture is telling me, hey, what is the base? Well, this is one of the greatest areas. All right, so maybe the retracement could be here. Therefore, my trend line, I could speculate for it to be something like that. So this is where you start, hey, how do you knew? It's not that I knew. It's that now the uncertainty has a little bit more light to it, right? So you're going to be waiting for some maybe reversal, and then when we start breaking through the 0 line to have this pattern here. So your entry is going to be right there. All right. Let's do this with support and resistance now. Let me just right click. Let's lock this. Let's right click. Let's lock this. Let's clear this up. And then turn it off and then turn the support and resistances on. Okay. Where do I have my most strongest resistance or support? That is the dashed one. So if I go here, remember where we were aiming at before? Oh, resistance. All right. Maybe do something like that. And right here, previous resistance becomes new support. Guess where my trend line is at? Very freaking close. Very freaking close. And then my predictive ranges, they were telling me a little bit lower, right? Because of this zone. But still, look at that other zone, right? So you have, yes, a different perspective, but that is not limiting you, all right? Because from here to maybe here, just slightly bit different, you see? But things starting to pair with each other, all right? So let's turn them both on, which is it is what I like to do. And then look, where is the confluence? Where both of them are pairing together. This is when you start seeing confluence. But by the way, do not throw everything at it at once. I think that's what is happening at you right now. You're getting overwhelmed with that much information. So what do you prioritize, right? So remember, first trend lines, then support and resistance and your oscillator, and remember to be synced within the market. Remember, right now we are on an decision zone. We can go up or down from here. So what are we looking for? We already have a low, a high. We're looking for a low. Even if that low, it's in here. You see that this is a non-trading zone. right? Why? Because we are on unknown areas. Because we do have money flow, but we are not above the zero line. They're counteracting each other, right? Still, I think that we're going to go higher. It's not going to do what I think. It's going to do what it needs to do. So at this point, you have the plan, right? Here's where your plan comes in. Plan A, okay? The thing goes up. How far will it go? Well, big area of resistance in here. Perfect. I'm going to be looking for retracement. That's my entry because it's breaking to the upside and then aiming for the next TP1, TP2. Easy peasy lemon squeezy. You see? Plan A. Plan B. What if the thing goes down? What is the support? Well, right here. But if I'm going to be losing that support, what is my next area of support? Right here. Yes, I know I have these two, right? But in that case, I'm going to be looking for the break of the zero line and the bounce of the pivot. I have predictive range and then I have another support zone. So this is going to be my entry channel. So my next area will be long it from here till there. Okay. So far, so good. Okay. So at this point, I think that we understand that we are in top areas. All right, we're in previous resistances, so the most obvious momentum or movement should be to the downside, right? So that's where we're going with so far for Plan A. Plan A will be rejection. Plan B will be acceptance back up, all right? No, there's no comparison like that. There's no comparison. I cannot tell you. It's like, hey, is this big wave more strong than the previous one? We don't know. Why? Because there's no volume calculation on support resistances. You could, but there's a whole process. You could be adding your VRVP to look at the volume accumulation per zone, and then looking at the order block, how big is it and how much volume does it have? And then comparing the two and see which one is stronger. But so far, this is not telling you that. It's only telling you this resistance, from all of the resistance, this is the strongest one. That's it. It's not giving you a value in here. I mean, that value exactly. Does that make sense? Where all of the green horizontal lines, they are from the support and resistance inside your Market Dynamics Pro. You click the gear icon, you scroll down, and you turn on enable support and resistance. That's the one. And then all of the supports are color code green and all of the resistance red. Just as a easy visualization. Exactly. Yes, exactly. It's just telling you, hey, just consider that this is the strongest support and resistance. Then if you want to add order blocks, let's go ahead and add it, right? Let's go to your indicators. And then let's do the Market Dynamics Pro once again. Okay. I'm going to turn everything off and look at that. I'm dividing everything in layers. That's to keep myself organized. So once again, I'm going to remove in here the POC because I don't need it. I already have it. Right? And I'm also going to be turning off, and give me guys 1 second, please. Sorry, I just need to attend to something here. Okay, perfect. So right here, we're going to turn off also triangles, and we're going to be adding order blocks. I'm not going to be going to how to configure them. Let's just use them as default. Another thing I don't want to see, it is this whole thing, all right? So I don't want to see the delta. It's just a summary between the volume, but I can see the volume between the strength. So show delta. I'm actually not going to be doing volume calculation when I do my analysis, all right? I'm just going to be seeing, hey, what is the volume, not how much volume there is it, and then bring in my calculator here. I just think that is just too much, all right? And that's basically it. I mean, I can leave the amount of money and the volume size, but whatever. I mean, I'm not really going to be reading this other than if I really need it, all right? So right here is one more layer. Where is that volume accumulation? Right? Important here, Gare. Order blocks, yes. Support and resistances. But it's also telling you where people are putting their orders. And therefore acting as a magnet. So where is it? Where those are? They're down below. You see that? So, not for sure, but the most possible, probable movement is plan A to the downside. And I know I previously I said plan A to the upside, but no, plan A to the downside. In between those two. Why? Randomly, because we have two very close together, right? So I'm just going to be aiming in between those two. And guess where is the third one? Right across the support and resistance and the predictive ranges. You see that? So that's what I'm pushing my trend line at. It's not that I know. I'm just guessing. Educated guessing. You see that? So that's how you use them. But once again, we already are at the very max limit that I would actually recommend you using indicators. Like no more than 4. Right? Well, what about don't want to be mean, but we're getting back into the main issue. Seeing too many indicators. Do you want to learn about prime blocks? All right, get rid of any of those and use prime blocks. Don't add them all. You already have everything that you need. You want prime blocks? Perfect, add them. But here's what the thing is. I believe this might be the issue. Trying to go so in depth with every single indicator that you're losing the picture. Like, excuse me, but fuck prime blocks, man. You already have 3 indicators. Use them, right? I mean, I feel bad because I know you are excited about using them, right? But here's the thing. Perfect. Or fuck, I don't know, predictive ranges or fuck order blocks, right? Who cares? You already have structure. That's what matters. Not prime blocks, not order blocks, not predictive ranges, structure. Then the indicators, as we have seen, they're pinpointing, right, where the uncertainty is at. So, right, not where the uncertainty is at. The uncertainty points will start be less uncertain with the indicators, if that makes sense. Remember, let's go back in here. Let's turn things off. Remember that it's not about if the price action is going up or down in here. It's about the structure. If it goes down, we're going to be looking for a rejection up. Right? We don't know what the rejection up is going to be. Does that make sense? All right. How can we, because that is an uncertainty point, how low could this be? So I can maybe start looking for the higher low. All right. So is there a maybe area that I can consider? Well, let's visit, I don't know. In that case, let's see. What is it? Market dynamics. What is dynamics? Dynamics Pro. And then we can add whatever you like. I mean, if you ask me, I like predictive ranges, support resistance, order blocks, and liquidity zones, right? I need to know about every single thing because I teach the indicators, right? But what do you like? Big four. Big four. And here's a trick. Don't ask me. Well, of course, you can ask, right? But don't ask me which one is better. I cannot answer that. Only you can answer that. I can show you how they work. I can show you what they measure. I can show you what they use. It's like playing Mario Kart, right? Which one is better? I don't know. Which one can you use better? Does that make sense? The power-ups. Like, for example, look at the indicators like power-ups. Okay? One second, it's just being bombarded here with messages. Okay, sorry for that. Okay, let's wrap things up. Gare, I think I believe, because that happened to me. I'm so nerdy. I'm so nerdy that I like to know every single thing, right? I really identify with you. I think. I'm not sure. Again, I think that we're very similar because you're asking me, hey, which is better, right? I also had that question. Like, but like order blocks or predictive ranges? Or is it better Fibonacci? Or is it better, which one is more, right? And the point is, they all have their graphics and stuff and whatever. The point is that you feel that click with it. You want to experiment with one or two? Dude, add them all if you want to, right? Like in here, but do it as I do, in layers, right? And turn them, find those combinations, right? Find those combinations that you like. It's like a power up, right? I don't know if you ever played like it was Sonic, right? Sonic on the it was the Sega Genesis, I believe, right? That you could grab some power ups, right? Which one was your favorite, right? So for me, I know which ones, but was that the same as you? Maybe, maybe not, right? So thank you, my friend. Really appreciate it. Thank you, brother. But the point is, hey, what do you like, right? What Mario Kart first guide do you like, right? What power-ups do you like? I don't know, the mushroom? Do you like the, I don't know, the fireballs? Do you like what can you do a better kill with, right? And you'll start to see them in the past. Like, for example, here, let me turn on predictive ranges, all right? And for me, and I'm going to see through predictive ranges, like kind of like think that they're not in there, all right? Because remember, market structure is the very first thing. Trend line, all right? Then let's go in the past, as I mentioned. And as I mentioned right now, trend line. Perfect. All right. What happens at my trend line? Oh, look at that. I went to find the blue line and then find the support on the golden line. Oh, that makes sense, right? And then I can draw a trend line from the bottom to the golden line. And look at that. It actually, once again, golden line. Oh, you see? Like for me, predictive ranges makes a lot of sense. And that is because in my way of trading now, my brain kind of like it doesn't see the blue line. It only see purple. And that's it. My brain naturally now fades this one, disappears this one's, and kind of like sees the blue line. Why? Because my eyes are already trained to seek gold. You see that? Oh, nice, right? Oh, nice. Right? Makes sense. Oh, it makes sense with trend lines, right? So the only thing I would actually tell you is trend lines, trend lines, trend lines, trend lines, right? That's the only thing that I would enforce. Other than that, what it makes sense. Maybe you said, hey, you know what? This thing is shit to me, right? I just don't see it. Perfect. Fuck predictor ranges, right? Who cares, man? What we care is that you can find them easy to read. Maybe prime blocks is your stuff, right? Maybe prime blocks is your stuff. So let's unfuck prime blocks and let's bring them on, right? So let's see. By the way, what is the prime blocks? I've been that we used to have them here, but we removed them. Liquidity premium, this predictive ranges, trend, prime blocks. No, yeah, we still have them here. Prime blocks. Just so you know, just for reference, prime blocks, it's our own smoothing factor on combining order blocks and liquidity zones. All right, so it's a combination of those. So let's go take a look at prime blocks. All right, so once again, I'm telling you, you see, like, I mean, I can actually just move this a slightly bit higher, and then I grab my trend line and push it a little bit higher, right, into that prime block, and who cares? Who didn't notice that? Only you, because we are doing it live, right? But other than that, look at that, the confluence, it's at the same point. Does that make sense? So, like, for example, right here, you will have a lot more things because we're combining liquidity with order blocks, right? So liquidity plus order blocks give you a little bit more maneuverability, if that makes sense. So, once again, where do I have the rest of my resistances? All right, maybe here, and then wherever I see the retracing, and then what is going to be my support? Money flow, or maybe support, and then up onto the rest that I haven't taken. Right? Perfect. So, again, it's not about one or the other. If you like them, and I do encourage you to search for them, right? To say, all right, you maybe Market Oracle, let's say Market Dynamics Pro, this one here, and then turn off the previous one. Reconfigure this one in here, right? Like, for example, POC, we already have it on the other one, so let's get rid of it. Triangles, yeah, no triangles. And maybe right now in this one, maybe you want liquidity zones. Perfect. I like liquidity zones. Let's add them. Why not? Liquidity zones. All right. Let's see. Oh, look at that. Very close to your prime zones. Are not exactly the same, but very close to the prime zones, right? Prime zones are a little bit more thinner. Right? And look at that. Where's the liquidity at? I'm telling you, man. I'm telling you. Once you see through, right? And we're noticing this as, so fucking obvious, right? Because we already know what we're expecting. We already have our trend line. We know that we have a high, low, high. What's coming? It's coming a low, right? Or the most probable thing is that it's coming a low. We already know that, right? So now what is the uncertainty? The uncertainty point is how low. All right, let's bring the indicators in here. And that's where you start working out the blind spots. Right? Then if you want to go and be extremely like nerdy, right? You add on top of this, hey, how's volume, right? Where are the liquidities? Where are the liquidations, right? And then you start fixing. Sometimes let's just say we open up a long position somewhere around here, right? And then the price action does this. It doesn't fully go in, and then you're pulling your hair out, right? So that's when you add maybe another indicator, or you tell yourself, hey, next time my entry is going to be slightly bit higher in Solana, right? Because you are practicing with Solana and predictive ranges, or Solana and order blocks, Solana and liquidity zones, right? So on and so forth. So rule number 1, trend lines, bro. Trend fucking lines. All day long. All day, all night. All right? Trend lines. Second, Structure. Higher highs, higher lows, higher low, right? When do you change up the structure? Breaking the trend line, creating the next trend line. That's where you add your indicators. Support and resistance. Everything is a support and resistance. Everything. But what kind of support and resistance you like, right? This is where that's where you do your own salad, right? All right. I like predictive ranges. I like liquidity zones, and I like Fibonacci. Perfect. So those 3 plus your oscillator, that's 4. That's it. That's it, bro. That's it. Keep it up to 4. All right. Keep it up to 4. Then, once you have those 4, do you want to try another one? Turn off one and turn on the other one. Want to try another one? Turn off one and bring up another one, right? So only 4 at a time. It's going to make your life much, much, much easier. And also, you're not going to lose the point of reference. If that makes sense. All right, so it's time for me. This already has gone a little bit farther that I was expecting. Brother, keep things simple. Keep things simple. I know, dude. I know. I work at Chart Prime. I'm mastering structure there, right? But first, fuck indicators. They are gonna be bringing light into the shadow. Once you know where the shadow is at, right? Once you start, of course, sharing your own light onto the charts. What is that? Trend lines, bro. All day, all night. All day, all night. Trend lines, right? Then, what? Market structure, right? Market structure. Higher highs, higher lows. When you start looking for change of that structure, right? Then, oscillator. And that's when you put in your indicators in there. Let's get it. Let's get it. Dinar Cabrera, my pleasure, my friend. Gare, my pleasure, brother. My pleasure, my pleasure, my pleasure. Keep it simple. Keep it simple. You'll see. Break off that noise, right? Sometimes there's too many teachers out there. There's too many videos. There's too many styles, right? You get overwhelmed. It had happened to me. It keeps happens to me. And you're going to find something very important. Right now, there's only 2 guys that I hear. All right? 2 guys that I really pay attention to. Right? Well, I would say actually 3. Actually 3. And that is straight intuition. Right? Because I love how simple he does things. Right? I really enjoy seeing his charts. But other than that, Piper, because he looks at macro data that I don't look at. So that's giving me feedback on the very macro data. And Alex on crypto because he does micro trading, right? So instead of me specializing in everything, I'm just specialized on what I'm good. 4 hours, 30 minutes, 4 hours, 30 minutes, 4 hours, 30 minutes, 4 hours, 30 minutes, 4 hours, 30 minutes. Grind it, right? And then I look at Alex, what is he doing? Perfect. I look at Train Tuition, what is he doing? And I take a look, hey, Piper, how's macroeconomy doing, right? What is the direction? And that's it. Everything else, guys, I don't follow other channels. I don't watch any other channels. And I'm not saying that they're not good. There's genuinely gold out there, right? But I just don't do it anymore because it's giving me a bias. It's overloading me of information that I don't want. They could be right, but if I just do trend lines, I know that I'm going to nail it. Trend lines all day, all night. Trend lines all day, all night, right? So on and so forth. Keep it, grind it. So yeah, I mean, and absolutely. Guys, if you have any other questions, if you want a video on request, remember, hit me up on the Piper Academy Discord, on the Chart Prime Discord at OC, and let me know what would you like to learn, what are you having troubles at, and we can go ahead and grind this up. Very important. Let me just do one more thing in here. I told you that I was going to give you where are the good videos at, all right? And they are on the Piper Academy. Right here, we're on YouTube of Piper Academy. Let's go to the playlist. And right here on Trade Academy, let me just pause this. Oh, come on. Right here, if you go all the way down, start looking right here, right there, like right here. The first three, they're just introduction, like we looked at today. All right, introduction. Then, oh, don't do the please lead. Chapter 1, naked charts. Right, that is starting support and resistances. Naked chart, what we talked about today. Naked charts, no indicators, no nothing. Right? This is the first video you should be watching. All right. Then oscillators. Remember, what we talked about? Naked charts because we have no indicators because we're doing market structure. And then after market structure, what it comes? Oscillators. And then support and resistances, right? Ranges, right? Chapter 4, you see indicators in my settings. Chapter, 5, candlesticks, right? Chapter 6, confluence and risk management. Chapter, come on, this is just killing me. Okay, sorry about that. Chapter 7, trend lines, right? Chapter 8, triangles, right? Chapter 9, wedges. Chapter 10, ranges, advanced trading, because right here from chapter 9, I think on triangles, that's when we start doing advanced trading, like adding more to it, all right? So take a look at that all the way till chapter 22, I believe. Yeah, chapter 22, falling knife strategies. All right, so we're going from naked charts all the way to that falling knife. All right, so yeah, I mean, that's what I got. This is where the free course they are. We're gonna be moving these courses only for subscribers only. So most likely it's gonna happen this December after Black Friday. This is gonna become another separate thing, and then maybe I'm gonna be making them like into a real course material with practicing and so on and so forth. If you want just a dedicated thing to it, all right. But we'll have to see. That's where you can find everything that we have learned today and much, much, much more. It's free for all, for everyone. Go check them out. And of course, take some keynotes in there. So other than that, guys, thank you so much for joining. And as always, see you guys tomorrow.